All right. Good morning, everybody, and welcome. It's TheoTrade Chat. It's Don Kaufman here, of course, on this Monday morning. Sit down, get ready. We're going to get started here. Everybody good? Everybody good. S&Ps right now are just a ways off the bottom of the overnight trade. So there was quite a bit of concern, of course, the cash open, specifically about Japan. Once again, we opened all the way down at 68.79. Oh, just trading just a bit of ways above that. You know, what's 80, 100 points amongst friends? But the S&Ps, so the S&Ps have actually been rebounding throughout the course of the night. They're literally at their highs right now. What does volume look like, though, on this Monday morning? And 180,000 contracts. Listen, for the kind of move that you've seen in the overnight trade, which is literally, I mean, you're looking at an 80 handle move inside of the S&Ps. Wouldn't you think there was going to be a lot more volume than that? Yeah, you know, I just quite surprised on that particular front that the volume is by no means heavier. Looking down the list, some of the usual suspects, everything looks very similar. The Russell well off the lows, obviously Nasdaq off the lows. The Nasdaq is a very slight lagger, which I'm kind of surprised about. There's some big news expressly inside of Nvidia. And Nvidia is actually down very mildly in here. We're going to talk about that in quite some detail this morning. We'll see how order flow kind of plays out with a minute to go to cash open. Look, I just wouldn't read too deeply into what you're seeing here in the pre-market. The one aspect everybody's going to talk about, of course, is the metals. We've got to talk about the dollar a little bit. But where's the trade right now? The trade's still going to be inside of tech. And that's exactly what we're going to watch here into the cash open this morning. Nevertheless, talking about the advanced decline line, we're still in a slop, just an absolute slop-tastic mess. Taking a look at the financials out of the gate this morning, they're going to be basically unchanged. The energy sector this morning has just a little bit of a bid. That's probably one of the stronger sectors in the marketplace as we come into this bell. And again, most of your tech stocks are largely unchanged. So again, most of the tech stocks are largely unchanged. Apple has a very mild bid. Let's come to today's cash open. So at the bell, as I was saying about the advanced decline line, don't anticipate a whole hell of a lot with the advanced decline line out of the gate this morning. Positive or not. By the way, look at this. None of the tech stocks are actually open. There is a technology issue going on. No question about that. There we go. Okay, that's not just order imbalances. That was a little bit of a technology issue, maybe, just maybe relating to some of the new option contracts that have been listed here. But take a look out of the gate. I've been talking about this incessantly. There's a huge bifurcation going on within the monsters of tech themselves. And what I mean by that bifurcation is, look, on a daily basis, you know, we rotate towards Apple and we're rotating away from Microsoft, rotating away from Tesla, but into Meta. And they're almost like dollar for dollar type moves. It's when I say dollar for dollar, I'm not just talking $6 here, $6 there, market cap to market cap type moves. And we're no longer propagating any real gains outside of what some, of course, would point out expressly inside of Google. Even Google, though, stone's throw off its all-time high, but not a whole hell of a lot to read into there. So out of the gate this morning, again, am I watching it? Of course I'm watching it. The S&Ps are popping a little bit here. Again, I would caution you, don't read too deeply into the first few minutes of trade. And, you know, the overnight trade, as I have said time and again, as of late, the overnight trade has meant very little. Overnight, what did we do? We rallied, and we've been rallying, and we're continuing right now to rip to the upside. Again, like you need to almost kind of reset your thinking right when this bell went off. I don't think this has anything to do with the persistent rally from pre-market. I don't think it has anything to do with it because the order flow, okay, is immense just since the bell. You've already done, 20,000 contracts in the first like 2 minutes of trade. Who the hell cares what happened in the previous, 10 hours of trade overnight? It just doesn't seem to matter. And again, it's this order flow. And if you take a look, like Microsoft, okay, is seeing some sell side. Now, on the surface, you're like, well, that might be bearish, but okay, Nvidia can't get out of its own way. Meta's got a little bit of a bid this morning, but possibly fading. Okay, these, if anything, are going to be a drag right now. There's a little bit of a drag that could come into the S&Ps in the next few minutes because again, what is not the leader out of the pack today? And the answer is tech. Okay, so what is leading the pack? Well, a moment ago it was financials, and listen, in the third minute of trade, things can turn around. Okay, do not, and I can't stress you enough, do not try to handicap and read into the S&Ps in the first 3 minutes of trade, other than to say what's actually going on kind of on the surface, because that's all you can see right now is just what's going on the surface. Oh, the S&Ps popped 10 points. Well, they already gave back, a couple of those. So you got to come in here, okay, and day to day sit on your hands a little bit and let some of these setups come to you. That's the only way, okay, you're going to survive these like onslaughts of order flow. And those come very, very early in the day. I'm not going to persuade anybody away from certain trades, but I'm going to tell you, okay, if you look at something like Meta, order flow hasn't played out in here yet, right? Nobody's come piling in to do a damn thing. I mean, I can just look at the stock without even looking at volume. I can tell you that, okay, nobody's come in here and done anything yet. So the order flow hasn't even like reared its ugly head. I can't tell you if the S&Ps right now are going to pop another 20 or if they're going to sell off by 20 at this point, right? I know people get very arrogant when it comes to market direction, and you really you gotta drop that. There's always a chip on people's shoulder. I know where the market's going. I'm going to tell you something. The longer you're in the business, the less you'll actually know. You'll learn, okay, to watch markets and watch kind of order flow kind of play out. But before I even opened up Meta, I knew nothing's actually occurred in here yet. This thing could explode back up, okay, by $6-7, or it can completely crater and take the NASDAQ along with it. Yeah, interesting. Okay, very interesting. So the day is wide open. Meanwhile, Tesla. Okay, want to see something interesting in Tesla? As I've noticed, it's sold off a couple of bucks just the last few seconds. Okay, so and how do I notice that? I just look at the percentages. I don't look at this crap over here, -9. I didn't know it was down $9 until I pulled it up on the damn screen. I saw all of a sudden it was down like, like a 0.5%. And the next thing you know, it's down like 2%. Okay, so the order flow is coming in there. Okay, it's going to be quite negative, prognosis negative. So take a quick glance. All right, there's some call buying, there's some call selling, there's a little bit of put buying, but this is anything but clear. I don't mind saying that. Like I'm looking at it and I'm like, I can't discern a damn thing out of there just yet. Again, give it some time. Speaking of give it some time, oh, they're up, they're running, they're wonderful. Look at this, okay? Look at what? Look at all the expirations in here. I like it. I like it. This is a Friday expiration, but that's a Monday, a Wednesday, okay, and a Friday. A Monday, a Wednesday, a Friday. Okay, they have started to list them. And yes, when they start to list them, they will trade. Oh, they will trade. So you can already trade, okay, technically a 0 DTE, but today's not its expiration. It's a week from now. But you will have a Monday expiration coming in next week on Tesla. Oh, I like it. I like it. All week we'll be preparing for that. That's going to be a proverbial crap fest of my liking, and I really do. I'm going to enjoy that the 0 DTEs. As I was saying about markets, okay, let some of this play out. Now, while you're letting markets kind of get open, let's get crazy. Let's talk a little bit about movement for the entire week, okay? Because that's kind of where it's going to be at, right? Oh yeah, there's just not enough coffee, man. There's not enough coffee. Rough weekend here. Okay. I think I only really left the house like once, but it was a rough weekend. Okay. We have like almost everybody now recovered from the flu. At least they were all sick pretty much the same time. I mean, it was bad in there last week. Even on like Saturday, okay, there were bodies everywhere piled up. Okay. I had all 3 kids at the same time down with the flu. And it was bad. Okay. Just Gatorade bottles everywhere. Okay. Looked like the beach in Normandy in there. It was that bad. The place was completely destroyed. I think my wife spent like most of yesterday. She's like, help me with all this crap. It was like a cleanup. It was it was brutal. Okay. You like that. Haven't left the house in 2.5 years. Okay. No, you're not weird at all, Ed. You're perfectly spot on, dude. You're just fine, man. Don't listen to everybody else. Okay. I find myself like I do. I get a little weird. Like if I don't like leave often enough, my wife makes me leave, especially when I go to the island. On the island, I go to the house and then I go to the beach. And sometimes I go to the house, the beach, the gym. I'll go to the gym, the house, the beach, but mainly I'm in the house, the beach, and sometimes the gym. And that's all I ever go to. It's good. Hmm. Oh my gosh. Every time I bring up, like, the kids have the flu, somebody always has to come in here. What? No flu shots? They didn't work this year. Okay. Flu shot didn't work. We actually knew that the flu shot wasn't going to work. Okay. By October, if you actually read, okay, there was actually an article specifically in JAMA about that. Yeah, I read that crap. All my friends are like doctors. Everybody around me is either a doctor or a vet because that's what I went originally to undergrad with a bunch of people that became doctors and vets. And by October, they said, it's not going to work. How do you know that? Well, because one of my friends is a PhD in molecular genetics in Australia, and it was already hitting them. So watch the Aussies for the flu. Okay, it's all their fault. Okay, ducks and the flu. All right, here we go. Okay, and they're at Costco. Yeah, when they walk into Costco, they jab you with like the flu shot. Hell no. Okay. Go to Costco. I ain't getting no damn shot. I'm not getting a shot. Um, every single time now, people bring it up. Okay. By the way, you guys, you're not alone. All right. I hear it from my own parents. You're gonna get the flu shot for the kids? I'm like, absolutely not. Does it piss you off? Yes. And I'm like, good, good. I'm okay with that. Um, by the way, I even asked my kids, they're old enough, to give me an answer. You want that flu shot? They're like, hell no. Okay. It's, 3, 4 really bad days. Okay. It was really bad this year though. All right, let's talk about movement in the markets. So first thing to kind of cover for today, and I'm going to take you into exactly where I found some of these numbers. So I am right now in the midst of doing a mastermind specifically, okay, for zero DTE trading. And in that mastermind, we talk just incredible excess about expected move because expected move, especially with like a Monday, a Wednesday, and a Friday expiration, the Monday and Wednesday expirations, people are like, oh, they're just adding those. It's not just adding them. It changes everything. Okay. It really changes everything. First of all, how we're going to trade earnings. I mean, come on. You're going to be able to trade butterflies around earnings. Even if an earnings announcement comes out on a Monday, okay, you can actually, if the earnings announcement comes out on a Monday, you can use the Wednesday butterfly to take a shot at it. Like, who the hell is not going to want to do that? Like, it's going to be spectacular. But then order flow, okay, as a whole is going to be that much more chaotic. So where's the chaos coming from? Chaos is coming from when you add, okay, option chains. Like what people don't realize, like if I'm looking at Apple right now, let's say that I am a market maker. Okay, I'll come back to expected move in a moment, but I want to talk a little bit about, okay, the new zero DTE. Let's say that I'm a market maker. Market makers, okay, the way to start the conversation with the new zero DTE and why it is so important. The first thing I'll tell you is market makers don't give two beep about what you do. They will just take the other side of everything that you do. Okay. It is completely algorithmic trading these days. And I don't want to hear about AI and all that BS because it is. AI is not fast enough, okay, to trade zero DTE. It's not even close. Right. So there's no AI decisiveness in here. Okay. Zero DTE, okay, is all for the market making firms about speed and spitting out the pieces. And what that means is if you're looking at Apple, and Apple's got a market of 405 at 410, okay? They'll trade anything at that marketplace and as many as you want. If you want to trade 1,000 up, they'll trade you 1,000 up. What 1,000 up means? You want to buy 1,000, boom, sold. You want to sell 1,000, boom, sold. If you want to trade at those markets, okay? And then the market making firm just goes bloop and hedges off the position in real time. In fact, the hedge is simultaneously with filling the trade, right? So it's all about this delta hedging. But here's the kicker. The kicker, okay, is that delta, okay, delta is the rate of change of this option. But the closer you come, and I'm going to show you, like, closer you come to expiration, see the gamma is only 3 cents. That means for every dollar move, these 255s, these 255 calls are going to move by about 45 cents. But as the stock keeps moving, okay, the option itself, it doesn't change all that much. It goes from 45 cents of delta to 52 cents of delta to 60 cents of delta. And these are 250 strike increments. It doesn't change that much. But if you look at something like 0 DTE, okay, this is options in the spider, okay, look at their gamma, okay, and this is it's a $700 product, so it's a $700 product. Look at the gamma. The gamma is how fast the delta is going to change. So if you will, I want you to imagine that you're running on a speed, like, on a speed setting of 4.0 on a treadmill. Okay, everybody know that like 4.0 on a treadmill is not very fast. Okay, you're basically at a jog. All right. Does anybody have any idea what the hell I'm even talking about? Sorry, I'm lowering. I got a heater on it over here. It's cooking me. It's getting me. Okay. Woke up this morning. It's like 37 degrees here. It was chilly. You're going at a speed of 4.0 on a treadmill. Okay. And all of a sudden, the speed just boom. Now the speed's at what? Okay. 5.5. And then all of a sudden, the stock moves. Okay. And now the speed is 2.3. You're freaking dead. There's no chance. Like if you were you're trying to tread water on this treadmill, okay, you're dead, man. Your speed is 4.0. You're at a leisurely jog. You go to 5.5. You get your ass thrown like right off the back of the treadmill. But then when you get back on it and you're running full speed, it basically stops on you 2.3. That's the way to explain, okay, how wild the options are in 0 DTE. Okay, because the gamma is huge. If you look at the Qs right now, $600 product, okay, their gamma is huge. Now, how does that, hold on, let's look at Meta, because I want you to look at a $600 product, okay, with 0 DTE, which is spiders right now, right? So 15 cents a gamma, then go look at a $600 product like Meta, and there's 4 days to expiration. Look, the gamma's 1, okay? So what am I missing over here? I'll tell you exactly what you're missing. Wait until Meta has an expiration on a Monday and a Wednesday. Okay, what it's going to do is it's going to make order flow far more erratic. Moves are going to be faster, more fierce. There's going to be hedging. Okay, squeezes are going to be unrelenting. And you as a retail client, okay, yeah, you're not going to be able to actually keep up unless you actually have proper strategy. Like, you're going to have to come in here with a strategy. Your strategy is not going to be, I think it's going up, I'm going to buy me a call. You're already dead. You're dead. Okay. You will not survive doing that. You can't just buy a call because you think we're going up. You're going to have to be incredibly strategic, though, as they add this Monday, Wednesday, and Friday, because the part that I'm leaving out right now, it's not just going to impact Meta. Okay, let's use Nvidia. Nvidia is going to have Monday, okay, option expiration, and its gamma is going to be huge. I mean, the gamma in here is going to be huge, but Nvidia can move the entire S&P. So when somebody comes in here and trades 1,000 lot of calls, shifts the stock higher, okay, because of gamma, all of a sudden they're going to be doing this Monday, Wednesday, and Friday. I mean, every day is going to be, gamma gone wild. And again, people they're not giving this enough credit for what it's going to do to markets. Moves will become distinctly sharper, far more violent. Okay. And you as a retail client, this is where you keep your hands off the mouse. You're going to take very strategic entry, okay, to your positions, or you're going to suffer the consequences. But it's amazing to see stuff like Nvidia. Look at this. This is a 1 penny wide market. 4 days to go to expiration. It's a 1 penny wide market. Okay. Are they going to be able to maintain that kind of 1 penny wide market though when the gamma is at 30? Okay. It's going to be insane. I like it. Okay. I like it. Okay. Somebody's pointing out Oracle. Yeah, we'll have to see how this goes in Oracle. I don't know. Okay. We'll see. It's up a couple of bucks in here. All right, let's cruise back over to the expirations. So the new zero DTE, okay, obviously it's out, coming to a theater near you. No, it's out. It's going. Now what we're looking at is, well, you have to wait until next Monday for it to come into full force, because the options, and they did this, apologize, they did this right. They listed the options a week before they expire. So they're giving you a little bit of lead time so you can actually roll crap into this. Like, and there's some volume. Like, look at Microsoft. Okay. Microsoft's already trading some of the Monday. Okay. This is some of the Wednesday. They're trading them. And you're like, there's zero open interest. That's because it's a brand new option. It just got listed this morning, right? There was no option. And then you take a look at the only one that's kind of weird is this IBIT. Okay. IBIT. This trades some serious size too. And here we are. And they added the, 3 times a week. Again, it is a version of zero DTE. And it is absolutely, when they add a Monday, a Wednesday, and Friday, it's the beginning of the end. They will eventually add like the Tuesday, Thursday. Okay. Maybe in August, I would guess. We'll see. All right, back to it. So, next thing I wanted to talk about, expected move. Expected move this week is $118. Now, you can derive that from a couple of different places, but the easiest one, like if you're on Thinkorswim, you could look at the Analyze tab, okay, and go over to Think Back. The only one this really works with is the weekend numbers in here, okay? So it doesn't work during the week. I don't know why. It's all screwed up. But this is where I derive the expected move from. It's 118 bucks. Actually, the truth is, I really don't derive it from there. My number, though, is exactly the same. Where I derive it from, okay, where I derive it from is right here. Okay, I'm actually looking at my phone. Long, oh man. Anyway, I actually take screenshots, and my screenshot is effectively identical to the 118 and 4 cents. And don't freak out if it's a couple pennies off. Like seriously, just calm the hell down. But more interestingly than just a $118 expected move, okay, $118 expected move is up there. The more interesting portion of that is that it's a $50 anticipation of movement for today. It was like going into Friday, like they knew there was going to be a little turmoil, maybe with Japan. I'm not going to sit here, by the way, and talk to you extensively. Okay. I'm not going to talk to you extensively about Japan and the Japanese markets, because look, it's all speculation at this point. For those of you that do not know this, okay, the Japanese yen is having issues. Okay. What type of issues? Well, for that, okay, I think it's fine. We can cruise over and we can look, obviously at the Japanese markets, but more specifically, let's go look at the yen. Okay. So what's the issue in here? Well, the Japanese yen has been getting absolutely decimated right up until, well, okay. First of all, Japan said that they're going to support their yen and have an intervention. Okay, that's where you sit down in a room and talk about currency for a long period of time, realizing that this currency does need an intervention. Start going off on a tangent over here. But it's also commentary at this point that the United States looks like they're willing to come in and support the yen. I'm not entirely sure why, but sure, what the hell, we'll go with it. Anyway, when you see yen up, okay, it's very interesting because it decimates, all right, their marketplace. So yen up, Nikkei down. Now, what's been happening? I'm going to relate this to something here. What's been happening to the US dollar lately? It's been getting absolutely annihilated. The US dollar, okay, is serious tankage. In fact, if you pull up like a 15-year on this, okay, I mean, it's a fairly sharp decline. And we've seen bigger, okay? We have seen bigger, but even a 15-year weekly, these are fairly sharp declines. This thing could easily hit 95 and then some. But what we're not really seeing, okay, is our markets are not necessarily popping to the upside just because there's currency it's getting smashed. But what is clearly popping to the upside, of course, is going to be your metal market, which continues to go absolutely parabolic. There's no other term for it. Okay. Parabolic just simply means, okay, ever increasing curve. Take a look at silver. That is real. It is hitting its highs as we speak here. Okay. Literally, silver is at highs. As I had mentioned to many people, I said, after it breaks through 100, you don't want to think it's over and going to short it. Okay. Because this is where it gets extraordinary. This is where it gets violent. Okay. And we're in that. This is violence in trade right here. I've continually looked and reiterated, okay, about the volatility in here. The volatility is, okay, effectively, let me just hide the equity volume here. Check this out, okay? We're over 100% implied volatility. This is a 30-day implied vol. So when you actually pull a chart of implied volatility, on any trading application, but specifically on Thinkorswim, that would be a 30-day implied volatility. This implies that 30 days out that the volatility, okay, is over 100%. By the way, you're going to look in here and be like, there's no options listed. They just listed them. Just calm the hell down, man. Just calm down. 28 days out, okay, you're at 105% implied vol. These are really serious levels of implied volatility. Okay, let's go back. Okay, 15 years. Do you see anything wild about this? That's the highest implied volatility on record, period. It's never, okay, since implied vol has been recorded in this metal market, it's never been higher, okay, and not by a little bit, okay, by a long shot. We're, okay, heads and shoulders above, no pun intended, head and shoulders above any implied volatility. Look, okay, I'm very comfortable saying metal, okay, it went from a trade, it went parabolic, yada. Who the hell cares? Okay. There is something deeply wrong, okay, with the financial system that this is going on. I think it's going to have ramifications right back to the S&Ps, and I do not think they're going to be good. Okay. If you can come up with a reason that we're running to metals, okay, like, you know, this is basically like Armageddon running to metals. You give me a good reason other than the fact that somebody sees egregious amounts of risk out there. I'd love to know it. I mean, I'd love to see it. You know, I don't have a good reason for you. I don't have a good reason that the markets are a stone's throw off all-time highs and the VVIX is still at 102. That doesn't make sense either. There's a lot of things on the screen right now, okay, that just do not make, okay, classical sense in here. And it's again, it's rather serious at this point. Okay. Volatility, if you're looking, but the VIX is low. The VIX is a kind of a stupid instrument now. Okay. Because the VIX is measuring two near-term options. It's not a good instrument. When I say it's stupid, I mean, it's kind of blind to some of the risk. The risk could be barreling down to the market and the VIX won't see it. Okay. And it's rightfully so. It's because you're looking at options that are further out. Financials look like they're rolling over here a little bit. So let me give you guys a quick rundown of a few positions we're in. CoreWeave, I did want to talk about that for a second. Okay, taking a quick glance. CoreWeave's got a huge bid to the upside today. This they just took in $2 billion of capital. I just want to show something very interesting. I was looking at this morning, and CoreWeave, okay, CoreWeave, this morning had a $46 billion market cap from Friday's close. Okay. Nvidia comes in and buys $2 billion, okay, of crap from them, and their market cap jumps, okay, by about $7 billion. So for 2 billion, you get 7 billion. Pretty damn good deal, right? All right, you be the judge in there. This is where, okay, I'm not picking on Garrett, but I am going to say this. Garrett's like, they're buying $40 billion. He's talking about the Fed, and the Fed is injecting $40 billion a month into the financial system. And I look at that and I think, but what are you crazy, man? It's a drop in the bucket. Who cares? $40 billion. Okay. This stupid little stock called CoreWeave added 7 billion. Okay. And it's not even breakfast yet. Like, who cares? Like, all of these moves, like if you look at something like Microsoft, okay, Microsoft is a $3.5 trillion company, right? Today it's moved, let's call it $4, but it has 7 billion shares outstanding. So it's 7, okay, times 4. All right. You think 40 billion is a lot? These monkeys just added what? Almost $30 billion, and we haven't even had breakfast yet. Okay, that's one product. You want to look at Apple? Sure, let's knock ourselves out. Apple has 15 billion shares outstanding and has moved $5 today. Tell me about market cap. Okay, this thing is going to do what? Add 100 billion today? 100 billion. Okay, so 40 billion. Like, look, I know that people want to talk about the Fed. I don't give two craps about the Fed anymore. I don't think they matter. Okay, the market capitalization of tech, and I'm going to make a big statement over here. The market cap of tech has actually made, in my opinion, the Fed is obsolete. Okay, the Fed is obsolete. They're putting money into the system. Okay, really? Okay, you want to see some money in the system? I got your money right here. It's called Nvidia. You want to put some money in the system? Now, granted, these are market caps. Okay, yeah, and everybody feels that much wealthier. That wealth effect, okay, translates a hell of a lot more than $40 billion being pumped into the system. Nobody gives a damn about $40 billion. They do give a damn, okay, when they actually look at the portfolio and they're like, oh, I am aroused that Apple has added what? $100 billion of market cap today. I don't know. Yeah, there you go. It's arousal. Okay, it's good stuff. I like it. There was a comment in here. CoreWeave is another moonshot. Okay, I think CoreWeave is a pile of crap with a big, huge. It's the circle of life trade. With that, I'm going to actually continue my coaching session. Is that okay with everybody? Normally I would like to cover a couple of the positions that I'm in, but Oracle were up a little bit. Spider's not doing anything. EEM, I'm actually, by the way, we're going to be just fine in EEM, just fine in EEM. Okay, EEM is a trade. Like, if you're concerned about it, don't worry, this sucker will roll over. Okay, emerging markets got to get killed eventually. All you have to do is see a little crazy dollar action, and which we likely will see in the next 30 days. So let's take just a 2-minute break. We're going to come 2-minute break, and we're actually going to get back to our coaching session. Okay, what are your chances? Understanding probabilities in your trading. So this is actually, we're already in part 3. Part 3. So if you haven't seen the other parts, well, you need to. They are archived for your perusal. Stay tuned, back here in about 2 minutes.